Market has fully recovered today. Palantir price goes back up to the $80 range. People are happy. The atmosphere suddenly turned bullish. However, some people still think this is a bubble. Analysts dropped their signals. Palantir CTO just dropped massive bombshells. Elon Musk stepped out of the dark and shared his thoughts. What is happening? How will all of these make sense? And what on earth am I even talking about? Well, let me explain. Disclaimer. What a wild ride for Palantir. After all the chaos, its price has finally bounced back, soaring into the $80 range again. This comes right after yesterday's insane tech stock crash, all thanks to the launch of DeepSeek. That release sent shockwaves through the market, making investors panic. But now, it looks like Palantir is totally unbothered. One Twitter user summed it up perfectly. And we're back. Turns out, the market overreacted. DeepSeek wasn't some doomsday event for AI stocks. Palantir doesn't rely on just one AI model. It can work with any of them. And at the end of the day, all the real value in AI keeps stacking up in two places: the chips powering it and the ontology layer organizing it. And another analyst broke it down perfectly. DeepSeek is exciting, sure, but it just proves what's becoming more obvious. LLMs are turning into commodities. The real game changer isn't just having a powerful AI model. It's about having a platform that brings together and organizes all of a company's data. That's what actually makes AI useful, helping businesses get real answers to important questions. And that's exactly why people are building these platforms with Palantir's AI platform. It's not just about AI, it's about making AI actually work where it matters. Going back, there's another reason Palantir took a hit yesterday. Big investors have been cutting down their stakes. Cathie Wood's ARK Invest has been offloading Palantir shares, and yesterday was no different. They sold more than 60,000 shares, adding to a total of over 375,000 shares dumped just this month. The sales were spread across multiple ARK ETFs, with the biggest chunk coming from their flagship Innovation ETF, which let go of nearly half of that total. Their other funds, focused on internet and fintech, also trimmed their Palantir holdings. But here's the thing. Palantir is still one of the top holdings in ARK's main fund. So even though they've been selling, they're not exactly bailing. And now, after all that turbulence, we're seeing Palantir bounce back. However, we can't ignore the fact that these wild price swings are making people lose their minds. Some are convinced this is just a bubble waiting to pop. At the same time, there are plenty of people actually hoping for a crash. For them, it's not a disaster, it's an opportunity. One analyst even threw out a bold prediction saying Palantir could drop all the way down to $42 again. He didn't sound worried either. In a tweet, he said, "Can't wait for Palantir to hit $42 again." And then there are the investors just waiting for the perfect moment to short it. They see these price jumps as nothing more than hype, convinced that Palantir is overvalued and bound to come crashing down. For them, a dip isn't just an opportunity to buy. It's a chance to bet against the stock and make money when it falls. That's the tug-of-war happening right now. Some believe Palantir is just getting started, while others are convinced it's running on fumes. That's the kind of market we're in right now, divided. Some think Palantir is flying too high, too fast. Others are just waiting to scoop it up at a discount. But for now, the stock is proving it's got serious resilience, shaking off yesterday's chaos and holding strong. However, all of this talk about a potential crash is looking less and less likely, especially when you take a look at what Palantir has been up to lately. Right now, it seems almost unstoppable, particularly with its recent tech advancements and how it's becoming more useful in real-world applications. A recent tweet really summed up Palantir's latest moves, especially in healthcare. It highlighted Palantir's work with Cleveland Clinic, where the CEO mentioned how they co-developed a groundbreaking AI product. He said, "This is the first commercially viable AI product co-developed by Cleveland Clinic. What's even more exciting is that with Palantir's help, they created a digital twin of one of the most complex hospitals around." So, what does that mean? Basically, Palantir and Cleveland built a virtual command center that helps the hospital manage everything from patient flows to doctor schedules and equipment usage. And the results speak for themselves. Patient transfers to the main campus went up, ER waiting times dropped, and the hospital saved a ton of time on unused operating rooms. It's like an operating system for the hospital, making everything run smoother and more efficiently. This isn't just some small-scale project either. Cleveland is one of Palantir's biggest clients in healthcare, and they've got a 10-year partnership that's only growing. In fact, the CEO said this virtual command center is now being used by other healthcare systems too. Palantir is already powering a significant portion of U.S. hospitals, and if they can scale this to even more hospitals, the impact could be huge. But it's not just about the numbers. This kind of efficiency can actually save lives. When you look at all of this, it's clear that Palantir's technology isn't just something people talk about. It's becoming an essential tool in industries that matter. This kind of real-world utility is what's helping Palantir hold strong, even when the stock market is unpredictable. Now, here's something really interesting. Recently, Palantir's CTO, Shyam Sankar, dropped some seriously bold statements during a Senate Armed Services Committee testimony on defense innovation and acquisition reform. Sankar described a major divide between the defense and commercial sectors, saying that the monopsony has created a divide, like the Berlin Wall. In simpler terms, he was pointing out that while companies on the commercial side are constantly competing and evolving, the defense sector is getting stuck with fewer and fewer contractors. He even compared it to state-owned enterprises, where innovation slows down and competition is minimal. Sankar argued that the companies capable of breaking through this barrier, like Palantir, have already done so. And now, if the U.S. is going to regain its competitive edge, it needs to tear down this wall between defense and commercial industries. What he's suggesting is that we need more innovation and collaboration across these sectors if we're going to stay ahead in the global race. It's a powerful call for change. This definitely caught the attention of everyone in the market space. People were all over it, praising Shyam Sankar's bold words and sharing their own thoughts about the need for more innovation in defense. But here's the crazy part. This wasn't just something the usual crowd was talking about. Elon Musk himself jumped in, agreeing with Sankar's statement and even posting a reply tweet in support. Why is this so big? Well, when someone like Musk, who's known for pushing the envelope in tech and innovation, backs up a point like this, it adds a lot of weight to the conversation. Musk's endorsement signals that this isn't just a passing thought, it's a critical issue for the future of both the defense sector and commercial innovation. For Palantir, this just further solidifies its position. It's not just some tech company in the background. It's a company that's already bridging the gap between defense and the commercial world. When you've got the CTO of Palantir making bold moves in Washington and getting recognized by one of the most influential tech figures of our time, it's clear Palantir is playing in a whole different league now. And here's the exciting part. Just in a few days, Palantir's Q4 reports are set to drop, and those numbers could have a huge impact on the company's future. One Twitter analyst shared two possible scenarios. Either Palantir hits $100 per share, or it could dip back into the $50 range, giving investors another chance to buy in at a lower price. No matter which way it goes, the sentiment is clear. Nothing's changed. Palantir remains one of the most important companies in the world. This makes perfect sense when you look at everything Palantir has been doing lately. Between its massive strides in defense, healthcare, and tech, it's showing no signs of slowing down. The upcoming earnings report could further prove that Palantir is on the path to becoming an even bigger force in the tech world. Whether it rallies to $100 or dips for more buying opportunities, Palantir's positioning remains strong, and it's definitely a company to keep an eye on. Looking at the long term, it's almost safe to say that Palantir isn't going anywhere. It's here to stay and keep doing its thing. With its current utilities, its deep connections to government defense sectors, and its growing presence in other industries, Palantir has the potential to take the lead in the AI market. In fact, one Twitter analyst even suggested a bold idea. What if Palantir just took NVIDIA's spot as the AI market leader and outperformed everyone from here on out? When you think about it, it's not that far-fetched. Palantir's ability to work across both commercial and defense sectors, combined with its innovative tech, sets it up to not just compete, but dominate. While others are still trying to figure out how to scale their AI solutions, Palantir is already deeply embedded in industries that matter, making real-world impact. If they keep pushing forward at this pace, there's a real chance they could emerge as the top player in AI, shifting the landscape in a major way. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money. So, don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.